Hey guys, welcome back to the channel. In this video, I'll be building off my initial analysis on Simon Property Group, ticker symbol SPG. I'll talk about their forward dividend yield, which was just about 14% a month ago, and the company has cut their yield to just about 9% now. Also, Simon Property Group recently pulled out of a possible acquisition of Taubman Group, and they're suing their tenants that are not paying rent, which is pretty big news for the company. And finally, at the end of the video, I will give my thoughts on investing in Simon Property Group, so make sure you stick around to see everything summarized at the end. Now, if you guys are not familiar with Simon Property Group, they're the largest mall-focused REIT in the United States. They have ownership interest in 233 rental real estate properties that, when all put together, add up to 191 million square feet, which is the equivalent of almost 7 square miles of just retail rental space. The main thing that sets Simon Property Group apart from other mall REITs is the quality of the retail space. On screen now, you can see some of their properties, but they're really nice areas for retailers, and that's why the company has succeeded so far. They just own spaces where people want to spend time. And when there's a bunch of people in a single place, landlords, like Simon Property, can charge a lot to allow stores to sell to those people. Right now, Simon Property Group has a forward dividend yield of just about 9%, which is a pretty insane dividend yield. However, it's nothing compared to the dividend yield that they had before the recent cut of 14%. For context, I try to keep my portfolio dividend yield somewhere around 3 to 3.5%. So a company that pays out 9% is way above average for me. Now that number is a little crazy, but it makes sense when we break down the calculation. Forward dividend yield is equal to the annualized most recent dividend payment divided by the current stock price. So, for example, let's say company A has a current stock price of $100. And they just paid their most recent quarterly dividend of $1. When we annualize their dividends, we multiply their quarterly dividend of $1 by 4, since there's 4 quarters in a year. So, when we divide the annualized dividend of $4 by their current stock price of $100, we're left with a forward dividend yield of 4%. Now let's say company A is expected to run into some trouble in the future, so their stock price drops by 70% to $30. Now, their forward dividend yield is 13.33%, right about where Simon Property Group's forward dividend yield was a month ago before the recent cut. So, the stock market has already priced in some poor performance in the future, and the most recent cut showed that the market had already priced in that cut as well, because the stock price did not really budge on the news. I've kind of mentioned this in previous videos involving Simon Property Group, but they have by far the least safe dividend payment out of all my investments that I have, and I think I've been pretty straightforward about that in the conversations in the comments as well. Which, by the way, make sure to like the video, guys. It really helps out the channel, and ask questions or start a conversation in the comments, because that also helps YouTube know that you enjoyed the video and they'll push it out to more people. I've received messages in the past from some of you guys letting me know that I was wrong about a coming dividend cut because their CEO or management said that they're committed to growing their dividends. And although this is true, it's helpful to put yourself in the shoes of management, because their ultimate goal, especially in REITs, is to provide values to its shareholders. If a company paid out too much in dividends, then it makes in profits, that company is eventually going to fail. And that loses a ton of value for the shareholders. Now, I fully expected this most recent dividend cut, and honestly, I expect another one over the next year unless something drastic happens to where they're able to generate a lot of cash flow. But I'll touch on that at the end of the video and how I'm dealing with it. Next up, some big news came out about a month ago that Simon Property Group was pulling out of their acquisition agreement with Taubman Group. I went into some detail in my original analysis video, which you can find in my REITs playlist after the video, but Taubman Group is another mall REIT who Simon Property Group has been trying to acquire for many years, because they both focus on high-end retail spaces, so they were bound to find an agreement at some point. In my opinion, The decision to pull out of this acquisition comes from two primary sources. One, Simon Property agreed to buy Taubman for $3.6 billion, and now they don't think the company is worth that much money. And two, Simon Property Group can't afford to make an acquisition right now. So for point number one, I think the desire to buy Taubman has decreased significantly because of how Taubman has been impacted by the virus. That's a little scary to me, because they are essentially in the same business and have fairly comparable products. Think of it like this. If AT&T reported that they're not profitable in the last quarter due to events outside of their control, let's say a labor shortage that makes them pay everyone double their regular wage, what do you think Verizon stock would do the next day? Now, even though AT&T was the one that said it, and Verizon hasn't said anything, their stock price would also fall because they both have to deal with that issue. This is similar to Simon Property Group and Taubman because they both have to deal with the same social fear, regulatory issues, and the global economic problems. So if Simon Property Group doesn't think Taubman is worth buying right now, it leads me to think that Simon Property Group may also not be as strong as we think. For the second reason, I think Simon Property Group absolutely cannot afford to buy Taubman for $3.6 billion right now. As an investor in companies, I think the first instinct when you hear some news is to see it through your perspective. But the management of these companies are usually pretty smart. If something seems off to me, I always try to figure out under what circumstances this decision would make sense. And that can give you a hint into some of the non-public deliberation that happens behind the scenes. So, I think Simon Property Group is a little scared for the short-term liquidity of its business, especially if they want to continue the dividend payments. And that's why they don't want to spend any additional money to buy Taubman right now. Even though I think this is a good move for the company, from that perspective, it still makes me a little more concerned about being invested in them. Outside of the reasons for the decision, I think there'll also be significant consequences for Simon Property Group. Right now, Taubman is suing Simon Property Group for breaking their acquisition contract, which will lead to a long, drawn-out legal process that takes some of the focus of management away from the operations of the business. I'm not an expert in lawsuits by any stretch of the imagination, but when I listen to those who are and their opinion on this topic, it sounds like Simon Property Group will probably need to pay some amount of money to Taubman, money that they just can't afford to lose. In addition to all this stuff with Taubman, Simon Property Group has begun to sue its tenants that are not paying their rent due to COVID-19. In my opinion, this is not a bad decision for management, but it really isn't going to have good outcomes in the long term. In my first monthly update video, I responded to a comment from one of you guys that painted Simon Property Group as greedy and asserted they don't care about people's lives because they are opening up their stores. At that point, I defended Simon Property Group because they did take precautions to be safer, and as a business, you cannot operate unless you're open for business, so I didn't blame them for opening. The reason I bring this up now is to show that these large companies don't get a lot of public sympathy, and when they decide to sue their tenants, I think the public is more inclined to sympathize with the tenants instead of Simon Property Group. Also, as a store owner who's looking for a spot in a mall to rent, and all other factors are the same, are you going to choose the mall that sued their tenants when they needed help and were struggling? Or are you going to choose the mall that took the hit themselves for a little bit and collected rent at a later date when the tenants were able to pay? I know that for me, it would not be a deciding factor. However, it makes Simon Property Group a little less competitive, and to some extent, it'll hurt their occupancy, margins, or profitability. Now, to pull everything together and discuss how I will be handling the holdings in my portfolio, it's one thing to like a company's management team or a company as a whole for making bad decisions. However, I don't think any of the topics I discussed in this video were bad decisions by management, but they all carry negative consequences. What this shows me is how difficult the situation is for Simon Property Group right now. These decisions are all correct to me, but I see them as the beginning to a negative feedback loop that could ultimately hurt the company beyond repair. For all the reasons laid out in this video, I decided to sell all of my shares that I own in Simon Property Group Monday morning when the stock market opens. This will allow me to put more money into other real estate holdings that I love, like Toll Brothers, Realty Income Corp, and WP Carey, all of which I've made videos on and are in the REIT analysis playlist that will be at the end of this video. So if you're interested, check those out. It's a sad moment for this channel because Simon Property Group was my first analysis video that really took off. And it's still the highest viewed video on my channel with over 6,000 views. But I think it's good to show the mistakes you make as an investor so others can try to avoid them as well. As always guys, thanks for watching the video. Make sure to like and subscribe because it helps the channel out a lot. And in a second, there will be one video and the REIT analysis playlist popping up on the screen, so click one of those, and I will see you guys in the next video, which will be my July portfolio update.